the outlook ahead. Ramesh Iyer is the VC and MD who now joins us on the show. Thank you so much, Mr. Iyer, for taking time out. Overall, it has been a good quarter. We've seen growth in your NII. Your profits have expanded. Help us understand the key highlights and what has led to the growth in Q3.
So, it's important to go back to when we finished our first quarter and we had set out very clearly that we are working with the earn and pay segment, and they were the worst hit in the previous round of the pandemic. And we had very clearly laid out saying that these customers, as they come back to their earnings, you would start seeing them repay because they are not intentional defaulters, they were circumstantially hit. We saw that in the second quarter. We started seeing improvements as the vehicles and tractors and three-wheelers and all of that started getting used at the marketplace. We started their cash flow improving. We had a good monsoon, therefore the yields were good, support price was good, the farm cash flows held up, some infra opened up. So I think overall the customer cash flow substantially improved. All our branches were up and working without any disruption. So put this together, the customers' earning begin to happen, our ability to go and collect installment, customer ability to come and repay in the branches went up. So all of this together helped the overall collection improvement, leading to a reduction in our NPA and therefore the provision reversals. Similarly, on the business fronts, last 1.5 years, we've been taking a cautious position against vehicle financing for the reason that the customers were under pressure and they didn't want to really add more vehicle. They didn't want to bring in so much margin money, etc. Again, related to what's happening as an economic activity on the ground, things have started definitely going in the positive direction. Positive sentiments in rural visible. Footfall at dealerships have improved. That has also pushed up the overall disbursement. And that's why we've seen a overall improvement to both in terms of disbursements as well as collection, leading to NPA reduction and therefore to the profit.
Good morning. This is Nayantara. Now, historically, third quarter and the fourth quarter are good quarters for the company. So what kind of demand trends are you seeing? What's happening on ground, whether it comes to consumption and, of course, recoveries?
Collection efficiencies across geography, I think it's holding up to upward of 94-95%, and we have been putting it out month on month. In fact, December had 100% collection efficiency. So, there is no exception. Every geography has started performing decently well. Have they come back to pre-pandemic levels? I think it's little more to wait for, but nevertheless, directionally, that's what we are witnessing. So quarter over quarter improvement is seen in every geography that we are operating, and we are across the country. So therefore, we don't see any pressure point out there. So far as the demand is concerned, I think on the vehicle front, there is still a pressure on the non-availability of vehicle. And as the OEMs start supplying more vehicles to the dealerships, as the inventory starts building up, that's a time one can really measure the demand. But as of today, we do see footfall at dealerships. There's a lot of waiting for good vehicles. And I think the demand is holding up clearly. On the tractor front, we've seen some pressure on the demand. But my own belief is as the infrastructure opens up, the contracting segment starts to buy, you would start seeing some numbers coming from the contracting segment. Pre-owned vehicles are on very high demand, because people who want to acquire a vehicle, maybe not wanting to invest in a new vehicle at this stage, are looking at pre-owned vehicle as the requirement. Again, supply is a constraint there. With new vehicle availability not being there, people are not exchanging vehicles. Repossessions by finance companies have not been very aggressive in the last few quarters, partnering with the customer. But as we move along, and if we do find that repossessions have to be resorted to, I think supply will also improve on the pre-owned vehicle side. So put all this together, I think the demand is holding up, and we would definitely start seeing disbursement growth. I mean, you look at our own disbursement growth, don't even compare to previous year. On a quarter-on-quarter basis, we have had a 24% growth. So it's clearly visible that the demand is holding up. And once the vehicles are definitely made available next 2 or 3 years, rural should see good traction.
And what is your outlook guidance for the new financial year? We've seen, for example, most of the pockets of growth coming in from tractors, but now we are hearing about a rural economy degrowth as well. So it'd be great to get your views on where you see tractor sales and whatever your guidance that you can give us for the new financial year.
No, I mean, we have always been around 15-18% of the product. The AUM mix has been from tractor, and we don't see that substantially go up. because every product is contributing to the growth. Some may be a little more and some may be a little less, but nevertheless, all the products are contributing to the growth. So clearly, we do see tractor holding up there at about 17% or so. But we have become number one financier for tractor. Again, we had lost some market share in between about 2-3 quarters before, but we have regained our market share leadership position, and we are number one tractor financier. And even in the tractor refinancing, we are seeing phenomenal traction. So I think tractor definitely is an important product and contributes about 15-17%. As far as F23 is concerned, as I said, I think we are very, very confident that now on you will only see growth trajectory very clearly in the rural market. Run up to next 3 years, we believe that rural will be a buoyant place to watch. Growth will be definitely there and will come from almost all products. As you know, we have launched leasing as one of our product, and we are very excited about what traction we have seen from corporates as well as from youngsters who want to acquire vehicle on lease. So that could add to some growth. We've come back into the SME segment, which we had started well, and we had gone slow because of the market conditions. Once again, we see traction out there in the SME segment. So you would witness an overall growth from us in the next 3 years if the market conditions do hold up the way it is, and we don't have another wave of pandemic hitting that market.